Numbers yesterday, and the big positive was that the bank cleaned up its books. Latha spoke exclusively to Axis Bank's Shikha Sharma yesterday, and she did mention that SDR and 525 should not be looked at as NPAs, and that 525 is really a case of a mismatch in the financing structure. Take a look.
I will still say, hold it. We will come back with a guidance number next financial year.
Okay.
But you've seen our numbers, despite the fears around the whole asset quality review and what impact it would have on banks. You've seen what it has meant. Yes, there has been a higher slippage than has been normal, but it's not been anything very dramatic. And while the regulator did give us dispensation to do this by March 16, we've actually taken it all in this quarter. Okay. So there's no surprises coming from the AQR stuff next quarter.
That's very positive. But you normally give us a guidance in terms of stress for the full year, and you had originally given us that 6,000 crore. Would you want to revise that number for the last quarter?
I think for the next quarter, it could be another 1,000, 1,200 crores. Okay. But for the full year of next year, we'll come back with numbers early in the financial year.
Okay. So what would this do to credit costs this year itself? You have reasonable, visibility for the current year. Should we say it would be 90 basis points?
So Latha, kind of depends upon the definition that we want to use. And if we use the definition that we want to look at everything that we dipped into contingent, then the number could be different. So if you just look at without the dip into contingent, it's probably about 90, around the 90. But if we look at the dip into contingent, then it would be a higher number, probably about 120 to 130.
Okay. Would that be about the worst, or do you think next year we should be prepared for a slightly higher credit cost?
I would be surprised if it's higher, but as I said, please wait for us to come back on that specific stuff early next year.
Okay, fair enough. I completely agree it's an evolving situation and we are in the midst of some manic selling of commodities. But let me come to how you are trying to build moats around your own balance sheet. You have increased your retail portfolio. What does it stand at now?
Retail is about 40% of total portfolio now, so it's actually grown pretty well.
And where do you see it going by next year? What are your self-given targets?
So, it kind of depends on what growth opportunities there are outside of retail. Retail is growing healthily at 27%, and we would hope that will continue to grow at a 25% kind of number. But in the last few quarters, we have seen opportunities in corporate credit growth coming from refinancing opportunities for projects which have got completed. So we're not actually targeting a mix anymore. It was important for us as a strategic imperative to have a more balanced book when we started out the whole journey of trying to balance out the book in 2009, and that's when we had said we wanted to increase the proportion of retail. At 40 retail, another 15 SME, we have a reasonable balance in the book. So we'll just look at where growth opportunities come. I would think that retail should continue to grow as a proportion of the book, but I couldn't give you a specific number.
Let me ask you very directly. Are you exposed to stocks, to accounts like, say, SR Steel? This is, a repeat defaulter. Are you exposed to that? And therefore, will you rethink the 525 for that company?
So, as you know, Latha, we can't talk specific names and specific cases, and we've never done that in the past. But, we will look at what needs to be done based on the stresses that are emerging in the system, and look at either strengthening the balance sheet or seeing whatever needs to be done.
But is it that the regulator is even asking you whether the cases that have been given 525 ought to be reconsidered?
We are not aware of any such conversation.
Okay. Is there any, self-regulation or, advised by the regulator that plants which were, given, say, a 40,000 crore assessment in 2008 should now be written down because, steel prices what they are and possible over-invoicing in those times? Have they asked banks to write down certain loans simply because they are not worth the number that was put up in 2008?
I think what would be prudent for banks to do is to look at these assets and try and see if there's any creating some kind of floating provision around that. And
You are doing that?
so, you know, we've been doing the contingent provisions, which were intended towards companies that we saw incipient stress coming through. And there may have been certain kinds of companies in the past, there could be others in the future.
All right, we should be getting you more thoughts from Shikha Sharma through the day, and those are thoughts I guess you would like to hear, since that is the prize stock today up 5.2%, and with it